Hello investors and traders, and welcome to the weekly market report with the market guys. I'm AJ Monty. Well, we've had a wild week in the market with all kinds of volatility, and I'm happy to say that our forecast from last week was spot on once again as the market followed the technical signals right across the board. This is a one-year daily chart of the Dow Jones Industrial Average ETF, ticker symbol DIA. And what I forecasted last week is that early on we would see a little bit of a rally. Monday and Tuesday we did. And then what happened? We broke right down below support on higher volume. Now, this volume is something we have to pay very close attention to, simply because if the volume continues to increase while the market is dropping, that tells us that the sellers are still very motivated. So for the Dow, as long as the volume is high, I'm expecting lower prices next week, which, by the way, is a shortened week due to the holiday on Monday. Markets will be closed for Martin Luther King Day. But I do believe that when we open on Tuesday, we'll probably come a little bit lower. And then once the volume drops, so we're going to have to watch for a volume drop here. Once that volume drops, then we will most likely see some buyers coming into the market. Now pay very close attention here because I said some buyers. I do believe that this is the beginning of a very severe bear market. So our goal is to wait for bounces in the market, and I think that could happen. And then once we hit resistance areas or signals that come in showing weakness on the part of the buy side, the sellers move into that, and that's when we're looking to sell. So we're looking to take short positions, either outright short positions in the Dow or contrarian ETFs or bear market funds of any sort, and we would look to buy those as the market goes down. So that's the diamonds. If we look at the spiders, ticker symbol SPY, that's the S&P 500 ETF, same thing. Forecast was spot on. I said that we would initially bounce, which we did Monday, Tuesday, Wednesday. We came up to that point that I forecasted last week. Right there at the end of that line is where I said we would go, and then we came back down. So I'm going to erase this line. We can see now that we're off of a support line. We're right on that support line. So I think the S&P might bounce a little bit next week, but ultimately I think we're going to fail and break down below support, mainly because the sellers are still motivated. Look at that volume once again. Keep an eye on the volume, match that with price, because volume is a leading indicator. You just have to know how to read it. We at the Market Guys teach everyone how to read volume and price, and then you could forecast on your own with great percentages. Just keep practicing over and over again. Look at the charts. Now, if we look at a more broad-based index, which is the Russell 2000, you'll see that we broke down below the support level. Now, that's what I said would happen with the Russell 2000 because we had very long red candles. The Russell 2000 is a more broad-based index than those we've just discussed. So now that we're down below key support levels, I'm going to erase these lines because they're no longer significant at this point in time. We're going to look at the most recent line here drawn, which is former support is now turned into resistance. So I think could happen is that we can move up to resistance, bump our heads against resistance, and then make another move lower. Interesting thing about the Russell 2000, and I'm going to show you a weekly chart. This is a textbook head and shoulders pattern. Left shoulder, head, right shoulder, and the neckline here is clearly broken. That is one of the most reliable topping patterns that exist in the market. And if I back up even further, you can see that this pattern right here is extremely close to what we saw back in 2007, right up until the crash of 2008. Look at that. 2008, we had bearish engulfing pattern right there before the big sell-off. What do we have? Bearish engulfing pattern, big red candles below neckline support. Watch out below. I think ultimately we're going to see a dramatic pullback across the board. Don't panic. This is not a time to be stressed out because if you see the pattern repeating, you can very well position yourself ahead of the market and actually make money on the bear funds or bear ETFs. So just don't grab onto your I'm going to buy and hold strategy, because that could wind up hurting you into this next bear market. So let's go back to the daily chart as we look at the Qs. QQQ, which are the power shares, basically representing the NASDAQ market. This actually looks a little bit stronger than the other markets because we're right at a support level. If we get a drop in volume here on Tuesday, that could mean that the sellers are slowing down. And I wouldn't be surprised if we get a little bit of a bounce on the NASDAQ market. Remember, that doesn't mean just get into another bull strategy. You have to be very defensive in this market, because the Qs as well, if you look at the weekly chart, you'll see that we have a breakdown in the overall trend line, and the volumes on the weekly charts are increasing dramatically. That means big selling activity. That means institutions coming into the market, and you really have to watch out. So the VIX is the final thing I'm going to look at right now. Volatility index is the leading indicator that we focus on. It basically measures volatility in the S&P market. We're looking at a possible pullback in the VIX right there. Remember, it works opposite to or contrarian to the S&P. Once we see a pullback, I'm forecasting that the VIX is going to go much higher, which in turn leads us right back into that bear market strategy. So Monday, which is the 18th, we are having an open house Q&A. I'll be very happy to analyze your stocks and answer your questions. All you have to do is go to the Market Guys website, scroll down, you'll see the open house Q&A session right there, and you can register by clicking on that link right there. Once you register, you can save your seat, and we will have an action-packed hour from 8 p.m. to 9 p.m. on Monday. Remember, the markets are closed on Monday, but we will still be having our open house session. Looking forward to speaking with you then. Have a great long weekend. So long.